Hello traders, Captain Safa here from Algo Tradingo. In this video, we want to speak about adjusted charts in stocks. Actually, if you want to work in the stocks, there are some issues about working on chart that you need to consider, and you need to use adjusted stock chart by price because the historical price in stock has to be adjusted for splits, dividends, and distribution. I want to explain some items to you to make you understand what it means. There are things that affect in stock charts as well. One of them is dividends. For example, the companies like Coke will pay dividends to the shareholders, and most of the shareholders that buy major companies like Coke wants to receive normal payments as a dividend from the company. So when the company pays dividend, the market cap get lower and drop, and because they pay some money to shareholder. So at the specific time when they pay dividend to the people, the price will drop a lot, and because the market cap gets down. But that's not a market issue. That's not an item that related to trading. So this kind of gaps will affect your chart because of nothing, just payment of dividends, or maybe the price of the stock goes higher and higher. For example, like Apple goes over than $1,000. Consider this: if you want to buy Apple share, for each share you have to pay $1,000. So in this way, most of the people that does not have enough money, they can't even buy one share of the Apple. And worse than that, if you want to work in option and futures, each lot is 100 share of that stock. So the people that want to participate in option and future of those stocks have to buy 100 share as one lot, and there is no lower than one lot available for them. So because of that, some participants will not cooperate that company, and the transaction will be deduced because of that. To solve this problem, maybe at the specific time the company announced that we want to split our shares. So at that moment, you will see a big gap in the market. For example, maybe the price is $1,000 for each shares, and they change it to $200 for each shares. So if you are a shareholder of this company, for each one share, you will be 5 share at the end, and 5 multiplied by 200 will be the same at 1,000 for one share. So you will not affect by this split, but the chart will have a big drop, big drop that is not related to the market behavior, and you just change the number of shares. So if you want to work in this chart as an historical chart, you will not find a good strategy. It lies to you about market behavior. So you have to consider this item. Because of that, there are some formula to adjust the chart based on historical data that you can, if you want to understand what's those formula, you can search through the internet for the formula for adjusted chart of stocks. There are different formula for that, and you will see that the charts will be adjusted for those items. So if you want to find a good strategy in those stocks, you need adjusted charts. The primary chart will not be a good thing for you, and it is useless to find strategies because there are some, because of these items that I told you, that affect that charts. So this is one of the important issue about working with stock. There are no such a thing in crypto or in the commodity or even forex like gold or silver. But if you want to work on a stock or a stock future or a stock options, you have to consider these kind of items, and you have to make sure that your chart is adjusted correctly. And the other important thing that most of the people doesn't know is to have adjusted all charts by inflation. Actually, inflation in the history will be different percent, and the power of money in the past will be different from what is now. So in the theory, all the charts has to be normalized based on the inflation or adjusted based on the inflation. Even chart of the fundamental items like retail sale and every chart in the market has to be adjusted for inflation. But there is no such a chart and such an information nowadays in the market, and it will be affected if you work in the long run or if you work as a buy and hold trader or as a position trader. For a speculator, it does not affect because you have the position that may close lower than 1 month. But if you are a position trader or holder, it will affect your income because maybe you see some profit, but as a point of view of interest rate and inflation, you lose some money. So it is important to understand. I want to show you an item. You can see here the price of gold adjusted for CPI formula. And as you can see, the price is something like this until 2015. So every chart, I told you, even chart of the news related items has to be adjusted or normalized based on the inflation. But there is no such a thing available for us. And for the speculative perspective, it is not an important issue for us. But you have to know that even in Forex or commodity or every charts, you have, if you want to understand the real aspect or real price of the market, you have to normalize all the things based on the inflation. Even the index has to be normalized. For example, Nasdaq or S&P 500 has to be normalized based on the inflation in different part of the previous history, and that is the real chart that you have to find a strategy on that. But for the speculators, it is not a big issue.